In the energy quadrant, we're looking at the October crude oil futures contract, which has now dropped for a second straight session after a significant gap lower on Friday morning. From Thursday to Friday, WTI Crude futures gap lower by 1.73% and then finished the day lower by over 3% on Friday. I think it was about 3.3% lower. This morning, we opened flat and moved slightly higher to 75.73. That was up about 0.25%. Then through the rest of the morning, crude oil dropped by 1.27% to 74.58. That's the low so far. We've got a little bit of time left in the session, but we're still down a little bit more than 0.25%. We have come off the bottom, obviously, and so far crude oil sits with an inside range day after a drop and a lower close, which likely points to a little bit of lower price action going into the futures close. Crude demand on Thursday, we got data from China showing that its economy lost momentum in July. Now that was Thursday, but the weekend with the geopolitical situation makes that data a little less impactful coming in toward the end of the week. New home prices in China fell at its fastest pace in 9 years. Chinese refineries also sharply cut crude processing rates last month on weak fuel demand. So troubles with global oil demand, especially Chinese oil demand, continues to pressure the crude oil market in the recent price action that we've seen. Also, OPEC prices have been steadily declining since April. If you look at a chart of a basket of OPEC crude prices, clearly it shows a downtrend since April, and these price drops are forced by demand weakness and then OPEC's desire to maintain market share, especially amongst its Asian clientele. So overall, the narrative, or I should say the fundamentals of crude price, still look substantially weaker than it did a few weeks back.